Hey there, my name's Curtis Lucas. You're watching Empire Building. In this episode, I wanted to share something that I discovered, which I found quite insightful. Now that we're starting to get this rapid price action again, for some people it's exciting, for other people it can be nerve-wracking. And with so many price targets out there, everybody's got themselves wondering, when are we going to top out? This cycle has price targets anywhere from $50,000 or $60,000 to over $1 million. That's a pretty big range. I maintain that I cannot predict the length or the height at which this cycle might bring us to. I've made reference to what I've discovered to be known as a super cycle. I'm going to be doing a video on that in due time, but for now, I wanted to address something else. Because one of the things that made it quite clear that we were in a bubble the last time round was the analytics on Google Trends for the search term Bitcoin. Now, I realize that most likely this is not the first time you've heard a YouTuber mention Google search terms for the search term Bitcoin. Just about everybody has seen this chart before. Time and time again, it's been pointed out that there's no way we can be at the height of this bull market because we still only managed to reach about half the level of searches for the term Bitcoin as we did in 2017. But I think it goes much further than that because as you can see on this chart, the timeline for these analytics only go back about as far as 2016. So the bubble before this one happened before the 5-year chart. But we can manipulate this data with any date range that we want, going as far back as 2004 that Google search terms will allow us to isolate. So in this episode, I want to, in effect, walk through the footsteps of somebody who may have been a part of that last bull run, who would also be looking at this data in comparison to the previous bull cycle that they went through back in 2014. In fact, we'll be looking at the data from 2010 until 2017 when that last bull run began. And we'll follow that month by month to see how those search terms panned out in relation to the previous bubble. Also, at the end of this video, I'm going to review what exactly went down with those options contracts that I held on to until the following day. I'll share with you exactly how much I made off that trade and what I've done with the proceeds. So if that's of any interest to you, then stick around to the end of the video. But for now, let's get into this. So going back to the exact point we are now in terms of date, February 10th, 2017. As it stands right now, it's actually quite remarkable how similar everything about the price action and in terms of Google search history, how similar this cycle is compared to the last one. In February, the number of times people searched the term Bitcoin reached just over 50% of its all-time high that it had reached at the end of 2013. Proportionately, that's exactly where we are now. Following February into March, we can see that the number of searches for Bitcoin began to climb again. Following that into April, a little bit of sideways action. Then in May, search terms for Bitcoin skyrocketed. And this only makes sense since the price of Bitcoin during that month nearly tripled. And the number of times the word Bitcoin was searched on Google surpassed the high it formed back in 2013. And I'm sure many people at the time believed we've topped out. We're going to fall again. And no doubt many people will be calling that again this time. But what they're forgetting is Bitcoin's network effect. There are already far more people currently involved, currently invested in Bitcoin than there were at the peak of the bubble in 2017. What the current search analytics tell us is that new retail investors, at least the vast majority of the FOMO crowd, has yet to show up. No doubt they've been hearing about Bitcoin, but it's still too scary for them. They already feel like they've missed out. And they've been told by everyone that it's too risky. And if you're going to invest, you should have done it before we broke out of all-time highs. So now they're willing to just kind of let it go. But that attitude will change the higher Bitcoin goes. This is the fundamental nature of the fear of missing out. They already feel like they've already missed out when Bitcoin is $47,000. Little do they know, soon enough, it'll be double that, and then double again. And they'll realize that, in fact, they were early. And by that time, they'll start hearing wild speculation about new price target, as everyone who is calling for Bitcoin to 60,000, 80,000, 100,000, 200,000 all start raising their price targets. The more they hear about this, the more they'll start to believe that this still has more room to run. Of course, they'll feel like fools for not just buying in when they had the chance, and who knows how much further it will begin to run. The point is that this effect compounds, and this is how bubbles form. I have no doubt this will happen again. It's simply human nature. But me being a student of human nature, let's take another look and see how it panned out the last time. By July of 2017, there was a slight pullback in the number of searches for Bitcoin, but then by August, they were surging once again, now beginning to dwarf the former high that those search trends had made. Maintaining that level in September and even increasing slightly more, and yet steadily further by October. Now, with the benefit of hindsight, today we know we're getting very close to the top where that bubble popped on December 17th, 2017. But while it should be noted that while we were still only 2 months away from that bubble bursting, the price had yet only reached about $11,000. So it would nearly double before that top would finally be realized. So needless to say, by November, the number of times the word Bitcoin had been searched dwarfed the highs it made during the former bubble back in 2013. And by December of 2017, that former bubble had nearly been flatlined. So now when taken as a whole from Bitcoin's creation until today, we can see all the spikes that had been formed since Bitcoin's creation in terms of its search history on Google. So as we progress through this next cycle, you can be damn sure that Google Trends will be a very useful indicator to tell us how far along into this bubble we might be getting. Because the former high that we made will be dwarfed yet again. This is simple mathematics. Having said that, it's still not going to be necessarily a very useful tool for timing the top exactly. But I would say, in terms of just being responsible, if there is money that you need that would somehow change your life, that would be a reasonable time to maybe collect that, or at least as much as you might need. Me personally, what I'm going to be looking to do is at least protect myself from the downside risk. And I plan to do that with the help of options strategies. As I've mentioned pretty much every time previously, I am still learning about these strategies. Luckily for me, I think we still have a considerable amount of time before we really have to start worrying about those strategies, but I do plan to do an in-depth look at how we might be able to implement these things to protect us from the downside risk, but still not miss out on any further upside potential. But speaking of options, let's have a look at that trade that I closed yesterday morning. I managed to exit all 240 contracts at $13.50. I certainly didn't time that perfectly, but considering these things were about to expire on Friday, and I was already up nearly 700%, I thought enough is enough. I don't need to get any more greedy. I sold those contracts and collected the net proceeds of $323,682.84. My principal investment in that was around $41,000. So yes, it was a significantly risky bet, but considering the kind of move that we witnessed, it obviously paid off. As I mentioned previously, I still have the other 100 contracts expiring on March 19th, which I see no reason to sell because I really don't expect this rally to be over with. And even if it does suffer an interim pullback, there's still a whole month to go before those contracts expire. I also realized that I really don't have any confidence necessarily which direction the stock is going to go next in the short term. So I didn't feel necessarily comfortable to just roll all of that money back into new contracts. But part of my strategy in utilizing these contracts is to be able to also acquire additional shares. So I took a portion of those proceeds and converted them into stocks. I purchased an additional 2,500 shares of Mara, increasing the position in that particular account to 5,000 shares. I also wanted to make sure I at least got some additional skin in the game by purchasing 10 contracts expiring June 15th, I believe, which cost me just over $15 per contract. But for those of you who are not aware, the price given in the table is actually the price per share, so you have to multiply that by 100 to figure out what it actually costs for that individual contract. So when you see a price of $15, to purchase one contract is actually $1,500. So my 10 contracts cost me a little over $15,000. So at this point, I feel confident if the price goes in either direction. If it drops, I can add more to that and lower my cost average. If it goes up, I'm perfectly happy with the position I currently hold, and I won't feel like I missed out. And this is the simple strategy that I am going to just hit rinse and repeat each and every single time. As we approach March 19th, obviously my hope is we have a considerable run between now and then. But one mistake I realized I made this time is that instead of selling all of those contracts, I should have held on to some of them, or in this case, if I wanted to pick up 2,500 shares, I should have held on to 25 of those contracts. And instead of selling them, I could have executed them so that my cost average on those 2,500 shares I bought would actually be reflected at the strike price, which was only $24 instead of the $37 or $38 I ended up purchasing them at. Now, in the end, I really don't think it makes that much of a difference, but it certainly would have made my cost average on those shares look a hell of a lot better. But as far as overall balance in my account, I can't say it would have made that much of a difference, but it's certainly what I will make sure I do next time. I also considered picking up even longer term call options for January of next year, but those are quite expensive right now, and I have no doubt there will be another period where we have a significant sell-off, so I'll be waiting for a moment like that so that I can acquire those contracts during a period of panic, just like I had done the last time. Unfortunately, yes, these cycles will continue throughout the entire year. You can take advantage of them, but I also feel a whole lot better doing this with options contracts as opposed to actual shares. Selling an options contract doesn't put any selling pressure on the stock itself. It's a completely separate market. And as the name suggests, those contracts give you multiple options. When you own a stock, you really only have three choices. You can buy more, you can sell, or you can hold. That's it. With options, there's dozens of strategies. I think I understand it well enough that I may be able to do a simple sort of crash course on exactly how to read an options chart. So if that's of interest, let me know down in the comments, and I'll try to put something together that isn't part of some course that I'm going to make you buy to take. I'm just going to do a video, and if that's of interest to you, then you can go ahead and watch it anytime you want. But if you're wondering what my opinion is on where the prices are going to go next, as I mentioned before, I haven't the foggiest clue. But I do know this is not over yet. My selfish nature would love to see the stocks drop a little bit more so that I can acquire some more of these contracts, but it's not up to me. But I do know I'm ready for anything that happens next. So I hope you're all enjoying the updates and staying safe investing in this. Please try not to get carried away. I would really hate to hear about somebody out there getting completely wrecked by these stocks. They can be wildly unpredictable in the short term. So as always, please do not invest anything that you need to survive. Make sure you've got a buffer. Don't go risking next month's mortgage or next month's rent. That is incredibly risky and extremely irresponsible. There are no guarantees things will pan out the way you'd like. And as always, I leave a disclaimer down at the bottom in the description of my videos every single time that anything I say in here is not to be taken as investment advice. What my goal here is to provide perspective and a little bit of education along the way. The decisions you make with your money must be your own. And in addition to what you might hear here, you must also do your own research. Occasionally, even with my own research, I might say something that is maybe not entirely correct. I might misread information and pass that on. Anybody can make mistakes. But if I find I do make a mistake, I'll be sure to correct it. But with all that, I hope you're all enjoying yourselves. I'm going to make an honest attempt to try to make regular videos, but I do have a whole lot of other things happening at the same time here. I'm also building an empire. So my thoughts are I'd like to be able to commit to doing at least 2 videos per week. I'm not sure which days that might fall on. I'm kind of circling around Tuesdays and Fridays, but it might be Mondays and Fridays and then try to throw one somewhere in the middle there. It really just kind of depends on what kind of news might break or what kind of video ideas I have or how much time they take to research. But I do want to make sure I try to get this onto sort of a regular upload schedule. I've been kind of chaotic. Videos come here and there, sometimes in the middle of the night, sometimes late in the evening, sometimes early in the morning. But I do know YouTube rewards consistency, so I'm going to try and work on that. But that's all for this one. Now let's get back to empire building.